Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Michael Lane. Michael is head of U.S. Wealth Advisory at BlackRock. Michael, great to see you. Thanks for joining me.
Thank you, Judy. Great to be here.
Thank you. So now tell me, Michael, what do you think are the biggest opportunities in the market right now?
There's a lot going on in the market right now. So there's a lot of different opportunities in different spaces. The areas that we believe there are maybe outsized opportunities would be in the factor space. Factors have been a little quiet lately. Value had a good run during the initial reopening, but we still think value is a good play, but we think quality, if you were to barbell the two, quality with value, we think quality, quality would be a good trade-off for that.
Okay, so now tell me, what are you hearing from institutions, advisors, retailers right now?
We're here at an ETF conference, so I'll focus on that aspect of it. The thing we're seeing a lot in the institutional space is insurance companies that are replacing individual bonds with ETFs. So they're bundling those into a basket in an ETF to get their credit and duration risk that they're looking for. We're seeing that, and we're also seeing on the advisor side a lot of questions around how do I unbundle emerging markets. So instead of having 30% in China, should I take control over my China exposure and buy emerging ex-China and then add whatever exposure I want to China?
Okay, all right, and how do you think advisors should be preparing their portfolios?
Well, I'm sure you've heard it a few times today. Inflation is a big question mark. Because of the double-edged sword right now with rising yields and inflation, we like the front end of the curve, so we are looking more towards inflation protection, but on the shorter end. So things that are short inflation protected, STIP, things like that, would be a good way to prepare your portfolio and avoiding duration right now. There may be a time to come back into duration if we see treasury yields rising above 3%.
Okay, all right. Michael, so great to talk with you. Thanks for joining me. And that's ETF Leaders, powered by the New York Stock Exchange.